welcome everyone. My name is Marty Chera, and I'm the owner of Express Capital Financing. We specialize in fix and flips and buy and holds for real estate investors. And we have our guest on today, Fiqual Bilal from NNG Capital. He does a lot of different types of investments, real estate investments. I do want to say that all this information is just consultative information. You should always seek out your tax advisor, your accountant, your lawyer for actual advisement on what you're looking to do. This is just our consultative free advice on ideas and concepts on how to make money in real estate. Fuquan owns a company called NNG Capital. He's been an investor for the past 8 years. Am I saying it right? Since 2013. He specializes in mortgage notes, tax liens, and passive income, amongst many other ideas on how to create passive income in real estate. So welcome, Fuquan.
Thank you. You said it perfect. It's just one thing. It's 21 years in the business, not
21
8
years. 20.
Yeah. I need
2003.
99. I've been in the business since 99.
99.
Yeah,
Okay.
21 years in the business.
Nice.
It's been a long journey, but I'm grateful for every step of the way. Thanks for having me on the show. I really appreciate it.
Beautiful. Yeah. So welcome on board. And so we're going to be asking Fuquan some questions over here. And again, anybody that guests that just came on new, put your questions in the Q&A section or the chat, and we'll reach out to you after the presentation. So if you want to just tell us maybe today what you think of the current real estate market with its current conditions, and most importantly, how do real estate investors make money today when it's a seller's market?
Yeah, for sure. I mean, I like the storm that we're in, so to speak. Everyone have the wind to their back right about now. So everybody's seeing the opportunity of pricing increase of real estate dramatically nationwide. So it's definitely a seller's market. Even in the paper side of it with the notes, you're seeing that as a seller's market because of the equity that's being increased as well. So, all of those are really blending well. People still having issues and challenges finding deals, especially on market, because it's very competitive. Still a lot of people migrating from New York and different places to get a piece of New Jersey somehow, some way. And, that's causing deal flow for the people who really aren't that experienced to find assets. So it's, I like the storm that we're in, like I said. I mean, who knows what it's going to transition into with the administration that's in place and everything that's going on. So you really just have to diversify your investments to kind of create a buffer hedge against any market uncertainty. So that's the strategy we play. So that's why we actually have a diversity model with our investment strategy. But we'll talk about that.
Gotcha. I mean, when you're saying you diversify into different passive income streams?
Well, I mean, for me, it's active. For investors, it's passive.
True.
So, different income streams, whether it's tax liens, we talked about that in another conversation, where that's just a different investment strategy approach we use to get real estate at a discount. And it's a way for us also to revitalize the community. And what I mean by that is helping the township get the properties back on the tax roll so they could generate income, and then you can renovate it and provide a better place to live for the residents that usually don't get that type of, quality of apartments and stuff that we're doing. So it's an impact project all the way around, and it is profitable as well. So we just use the tax liens as a strategy to do that, to get to the property. So that's just one. And then we also invest in paper. I fell in love with this business like in 2011. I was transitioning out of real estate. The market was making its recovery. I learned a new investment strategy, invested some of my money personally, built, some case studies that I was satisfied with to share with, some people to take a ride with me. And I created my first fund in 2013. That's why you got the 8 years, because that's when the note company was created back in 2013. And my heart is still on fire for that. I think that's the best investment strategy in the universe, is passive, sort of like what you do. I mean, you guys do private money, you're definitely in the note business. You just, really armchair work, really. It's not really too much in the field stuff. So I like that passive part of it, but it's still actively managing the investment.
When you're buying mortgage notes, or you're creating mortgage notes for
No,
borrowers?
we're buying them. We buy institutional paper. So we don't do like what you guys do, originate,
Got it.
loans on that end and secure them against properties. We buy debt that's already in place, stuff that's self-performing, scratch and dent paper, that we can get at a discount, where we can, share our discount with the borrower or debtor that's in place there, and turn it into a win-win situation. So I love the note business for that, because you can give a homeowner reprieve and really, create impact that way as well. So
You
that's it.
keep, I'm
That,
sorry, go ahead. No, I'm sorry, go ahead.
I was saying you can create an impact project with that as well by doing that.
Right. So you're keeping the homeowner in the house and you're just restructuring their debt now, and you're becoming the lender, so called.
Absolutely.
You are the lender.
Yeah.
Yeah, you are the
Yeah.
lender. Got it.
Yeah.
Got it. Okay.
So, well, yeah. So basically, we take the lender's position from, the assignments and everything else when we buy it. But yeah, it's exciting.
It's working
I
good.
love
Do you
it.
recommend newbies to go into it, or only savvy, experienced
I would
investors?
recommend people who really understand real estate basics first, and then if they're going to get into no business, performing notes, buy something with some cash flow so they can get used to the payments and understand it a little bit more. And then when they're a little bit more comfortable and educated on the investment, and want to cross over to buying stuff that's, a little hairier, because they have the skill set and the vendor resource to manage it, then they can grow to that level, but not just jump in and
Not just jump in, of
so
course, of
yeah,
course.
yeah. I mean,
Yeah, because I get a lot of phone calls every day. People are telling me, I can't find a deal. Do I lend money on note financing and tax liens and all that? And unfortunately, I don't do that, but it's a good way to create the income stream like you were mentioning. Is there anything else that you could mention to the attendees here tonight that would help them with their mortgage notes, like, and non-performing? I know you mentioned performing, so they can get the cash flow, and when they got more experience, they can go into the NPLs. Am I correct?
yeah. So you gotta, every game have rules, right? So you have to see how you're set up for compliance. First and foremost, you have to have services in place. Highly recommend that. You might want document custodian. So there's vendors, and once you get educated in a space, that you have to learn how to have them manage it for you, so you become passive in it. And from that point, I would say, that's why I say start off with performing, because you get to learn that along the way, and it takes time to learn this business. It
Right.
takes time to learn this business. You have to really, it's a community. What I see from note investing, my years of traveling, going to different conferences, all the way up to, the national servicers and everything else. It's a community. So you got to get in the community, get to know people, press the flesh, create relationships, and that's how you grow in that business. Is this not okay? I'm going to jump in, give me an Excel sheet with all the processes, and then you're going to go and be successful. It takes
Yeah,
time. It's
exactly.
different. It's a
Yeah,
different investment.
it is. It is. I mean, my motto is networking is an opportunity to grow, and that opportunity is meeting the right people and growing by calling them and asking them questions and start building up your company. So that's awesome about just, with the information that you're giving. How about with, you know, tax liens right now? Because this pandemic created a lot of situations of pre-foreclosures, foreclosures, tax liens, probates. What is your thoughts about purchasing tax liens, whether they're a newbie investor going in or somewhat of a savvy investor?
Yeah, I mean, to say newbie and savvy, I mean, anything for a new person, I would say you have to get educated on the investment. When I first learned about tax liens, I went to the auction first, right? And I watched how the game was played. I just observed for a while, asked questions, observed, got out, paid an attorney, retained an attorney, spent about $2,500 just asking the attorney questions, attorneys that did tax lien foreclosures. I wanted to know what was my risk and what was the cost involved and what is the process and how long did it take. So I leveraged them as boots on the ground to teach me. And then I went to the auction, I observed, and you're talking over at least close to a year's time. I mean, I've learned about that strategy through my years of doing real estate investing, but now I was really looking into um, taking the action step to doing it. So I had to go boots on the ground, observe, and over time you learn it. So that's what a newbie investor should do. before they spend a dollar.
Yeah.
And then when they feel confident and they have all the processes in place and they have the right vendors and they know the costs associated with it, then they go. It's two different types of tax sales that happen in different municipalities or townships. One is the main one that happened, right around Christmas, sometime or before the new year, for delinquent taxes, that they put notice out to encourage people to pay those taxes so the city can have money to operate, or township. And when people don't, they put it in sale sometimes before New Year's, and you could participate on that. A lot of that stuff get bid down because you have some institutional players or some big funds. So, you may find an opportunity there. But the other side of it, sometimes they do for vacant properties, and a lot of people don't notice. You can check the vacant property list in any township and then ask them how do they disposition those properties that are delinquent with taxes as well. And they sometimes have special auctions that you have the opportunity to get a one-off or a couple of them. So when I started to understand that and what municipalities participated in that, I started to attend those auctions, and that's how I became successful in the business, by taking those action steps and then being fortunate enough to win bids from, again, having real estate knowledge when I went to evaluate the property before I made a bid on it. So it takes, you have to be active. It takes learning, but you have to be active also. Like me, every property, it was about maybe 30 or maybe 35 properties on a list. And there was probably about 22 that I wanted to bid on. I drove every single property. Most people won't do that. They'll go on Google, look it up. But this is, right in my backyard where I'm investing at. So I wanted to make sure that I was making the right decisions and get my maximum offer that I was going to make. And yeah, it was fortunate, and then had to go through the process of agreeing what I wanted to do with those special tax lien auctions require you to do, is revitalize the property to add value to the community so they can put them back on the tax roll. So in those, they don't allow you to sell the lien or transfer it, because you're really obligated to the contract that you have with them to fix it. That's what they want to give you the discount on it for.
So you're fixing up a property that you bought from a tax lien from the county?
Absolutely.
Really?
Yeah.
I don't know you have to actually fix up the property. I thought just the county wants their money.
The special tax lien auction, they have requirements that you can't get the CO.
Mhm. On the vacant properties.
On a vacant property.
Okay.
Yes. But the regular one, no, you can assign those. You can, do whatever you want with those. But that's the one I was talking about. That's before the right after Christmas, that general tax lien. But this is the special tax lien auction. This is a little bit different, vacant properties.
And when you're buying a tax lien, I mean, people think that they could buy it for $10, $20, but I'm sure it's thousands of dollars because that's what's owed. When does the owner have the right to actually pay it off and get it back into their hands?
Yeah, so there's a 1-year redemption period, even after you foreclose, but that is really based on how do you file, how do you serve them? Like you have an in rem process and you have an in personam process. The in personam process is like a regular foreclosure. They get served and everything else. It takes probably about 10 months to a year for that to happen. The in rem takes maybe 4 to 6 months, where you're just given certified notification, and then you go file your documents to actually get the final judgment or whatever. That could be challenged more. So you have to be willing to go the longer route, which may be a little bit more expensive, but it's a true foreclosure. So it's probably like a 10% chance, if that, they can redeem it, because you notified them, you gave them notices. And even if they do redeem it, they have to cover all of your expenses, including renovation, everything else. So it's really rare that will happen, especially if you're buying a tax lien on a property that needs $80,000, $100,000 in renovation. Somebody's going to come back after that. So, but I've seen some of the NREMs get challenged. I've seen some people, lose position over that. So that's another education part, that the attorney that you hire in that local municipality where you're going to invest in will school you to,
Right.
what you need to do.
I just want to emphasize what Fuquan is saying here is, learn, go to the courts, read books, listen to podcasts, and talking about podcasts. That's how I met him. And he has a website for the folks out there. I'll tell you what it is. It's pfrei.co. And his podcasts are great. He goes into, a rehab, what to look out for, what he did, maybe some things that he would change in the future. Am I correct? I saw some of those a few years ago where, you kind of said, oh, I wish I would have done that. I should have done this. But real estate is like any other business. You got to learn it. Don't be afraid once you finally learn something. There's never 1,000,000% of learning. Once you get yourself to a certain level point of 50% or 80%, start diving in. I'm sure you'll agree with me, Fuquan, that you just have to finally go in. You may make a mistake, but you're going to learn from your own mistake. And like what he said, also going to a lawyer, some people leave it on a flip deal or buying a hole. They don't want to hire a lawyer. They could do whatever they want, especially in Jersey because it's a title state. But I always tell all new investors that it's better to spend 1,000 or 1,500 on a lawyer who's going to give you the best advice and is going to protect you. And you went for protection and you went for advice and you went for knowledge, which was very important. I like that,
Yeah,
which is
man.
very important. Okay, and as far as tax lien, can you tell folks like where can they pick up tax liens in their I guess in the New Jersey county, I guess, or can you give them some advisement of where to find them, what to start doing a little bit maybe?
Yeah, sure. I mean, anywhere, wherever they hear this at, New Jersey or any state, they can actually go to the local tax office and start there and ask, when do you guys have your tax sales? How often are they? They give you a schedule and dates, and you ask them when they put the list out so you can have advance notice to do your due diligence. Most of those will be occupied, from what I know. So it's going to be rare you're going to get the property. That's more of a play of making passive. You come in and you win a bid, they pay you off, you make whatever percent, 8%, 16%, whatever it is, and you don't get the property. Um, the other one, you do pretty much get the property, but you actually have to have the money right then and there. Like you was mentioning, people actually, you lend on tax liens. When you go to this auction, you have to have the money when you win the bid. So you go bid 10,000 or 30,000 or 100,000, they want the money like before 5 o'clock, or it goes to the next highest bidder.
Right.
So that's something they should know. You can't go, because I know we talked about that. You can't get a loan, um, because there's nothing to secure it. Something else they should know about risk in this business is because you bought the lien, right? You're not the owner of the property, so you can't technically insure it because your only equitable interest is the tax lien, but you can't insure the land and property because that tax lien haven't converted over to, ownership. So that's something you need to
Okay.
be aware of. So if the house burned down and the
You
insurance pay
just,
out, you're going to get paid, the property taxes or whatever, but you know, that's
but they're
something you
not
need to
going
be
to get
aware of.
paid what you won the bid for because that was past arrears of taxes.
It's
So,
possible it may be upside down, so that's why you have to
right.
risk that, and then you have to watch out for the title readers. When your attorney do file the eviction process, I mean the eviction. I'm thinking of landlord tenant. When your attorney file for the final judgment, um, that's going to put on the radar for all of those guys who do direct to sell campaigns, and they'll get a ping and they'll start reaching out to the homeowner and negotiating stuff. And if they sell the property before you foreclose, then you just get redeemed. And sometimes if there's some equity in there, or the house sell for way more than what you owe it, they have the opportunity also to make money and pay you off as well.
So in buying a tax lien, are we a lien holder?
Well, the tax lien comes before first mortgages. So even if you lend somebody money and they got delinquent on their taxes, I'll be able to wipe your position out on any property you have secured.
True,
Yeah.
true. But when you're acquiring a tax lien, you don't have any liens in the property because, like you said, it's not securitized by the collateral.
Well, it's a lien, tax lien is more superior than a mortgage lien. So regardless, whoever bought that property, they got to pay the taxes. They don't
Mhm,
disappear. They're
mhm.
attached to the property. Anytime that property transfer, because you have to have the taxes current before, you
Right,
know what I mean? So
right, right,
they
right,
got to pass go.
right, right. Okay, very good. Any other information that you could relate to our guest?
No, I would just say that, really coming on podcasts like these, and really immersing yourself and learning more about this industry and just being mindful will really get you to the next level. And it's really who you surround yourself with, right?
Oof,
Um,
yeah.
that's really so important. And just taking action steps. That's it, man. I really appreciate you having me on the show. I hope someone got value from this. And
Awesome, awesome. Are you still doing flips today as well too? Are you finding properties and doing flips?
oh, for sure, yeah.
Right. Okay.
We do, and that's most of the content. I have a walkthrough feature. You guys can go to YouTube and type my name in, Fiqual Bilal. You'll see some of the stuff that I do before and afters, and the different impact we make in the community in the low income areas. You'll see all that. Um, but yeah, the flips, that's really the part of the diversity strategy. You know, getting those cash injections from fix and flips. You know, maybe some monthly payments from performing notes or rental properties. So you kind of insulate yourself and create a buffer or hedge against any market uncertainty. But again, it's just 21 years of experience with the right processes and systems, and always trying to figure out, how do you make it better and how do we add value? It takes time,
It takes time. Yep,
and it
yep.
takes the right team. Like I have a great team that, I'm grateful for, that is able to, um, put my vision into action, so to speak.
Right, right. I mean, me as a lender and investor also, I feel that once this moratoriums are lifted from the foreclosure and the evictions, there's going to be an infusion of properties coming up on the market, and all over throughout the states, because people are still impacted by it. They're hurt by it, whether they're an owner occupied, or maybe parents died and children got their property heir to them from this pandemic, and they don't want to hold on to the property. So there's going to be, again, in my opinion, as a lender and as an investor, a nice infusion of properties coming up very soon. What are your thoughts on
Yeah, who knows when that's going to happen? If they keep pumping money, 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 we can stimulate this thing another 3, 5 years. Who knows? Again, just really diversity is the key. That's all I can share with you, I guess.
When you're saying
Yeah.
diversity, do you mean like do different types of deals, flips, buy and holds, tax liens, or?
If you have experience in the right teams and processes and systems, and you can do things that generate cash flow, like just flipping is not going to make it. That's transactional. You need to, if you're a flipper out there, you also need to be adding some rentals to your portfolio so you can build that cash flow. I know $500 a month, $1,000 a month is not as sexy as making $60,000, but you have to diversify. Trust me.
Yeah.
Trust me.
Well, it also comes with growing and doing a few deals and feeling comfortable going to the next step.
Yeah,
You
every
know,
three deals, the one you buy, make it a rental.
right.
Do flips, the next one you buy, make it a rental. Just keep building your bucket like that a little bit at a time. And next thing you know, you have 10 rentals cash flowing, or do something multifamily. So if you have the ability to do that, even better, you know?
Got you. Got you. Anything you want to share about the rental market? I mean, we see values are going up and people are concerned that the cash flow is going lower. What is your thoughts about the rental market?
The rental market, for me right now, I want to say no comments. I mean, I'm very grateful that because of the areas that we invest in low income areas, that we have programs for battered women and children, Section 8, and that's 85% of our portfolio. So we're very grateful for that. And that's how we made our transition through the pandemic, is because of those government backed rents.
Right.
So that's very important. So that's another thing when you diversify, try to go a little bit deeper and make sure that you're able to have some sort of guarantee payments or some type of contractors programs or whatever you're doing. But yeah, I mean, the rental market to me is on one side, because of the moratorium, it's slowing things down and people are gaming the system. So no investor who knows somebody is messing with the cash flow will be happy about that. But it's a reality.
It is certainly a reality.
Yeah.
Yes.
So
I mean, the feds are expected to raise the rates, whether it's 2023 or 2022. With that said, once the rates rise, values will start to decrease. But right now, it's more of a renter's market still, because the young folks, 20 and 30 years old, can't afford these new crazy prices out there, so they're forced to rent. And unfortunately, again, this pandemic, some of these landlords are going to become tenants. So I think that, my opinion, the rental market's going to only get broader and stronger in the next few years,
yeah,
because there'll be a lot more renters, what do you call that word? A lot more renters out there, the demand for renters.
I can see that. I can see that. I can see that even now when it's not, people have to make options, to move, or if they sell in a house because they want to capture the equity that's in this market, but they can't buy a house. Those people transition into rentals also. So I definitely can see that.
And a lot of people are moving to suburban areas in different states with their children, their grandchildren. They either want to upsize or downsize. So that's a good thing also. Okay. I appreciate your time and just want to know if anybody has any questions at all for Fuquan at all. I see here besides Section 8, what other types of government-backed housing programs?
You said what other or what are?
What are the other types of government-backed housing programs besides
Yeah, oh
Section 8?
man, there's so many. Again, you gotta go into your local
County.
county, and not county, the local municipality. That's where you want to go, right? Sometimes from that level, you can find programs, renters assistance, and everything else. They have an urban development department, and just depend on where you're investing at. But most of them have a department where you can find out if they have programs for tenants. I mean, I know in the areas I invest in, they have that, especially after COVID. Everybody have all these types of programs. So you can really go online and search just statewide, countywide, citywide. There's so many different programs. Some of them are 1 year, some of them are 2 years. There's a state program where they pay the rent for 2 years. There's another one where they pay the rent for 1 year. And we're actually utilizing these programs for some of the cash tenants that we have that are delinquent, to help them catch up. We're tapping into these programs, sharing this information with them, getting them to do their part, and able to benefit by bringing them current with those programs. So checking these local places. You got to put the shoes on and do the walking.
That's it. I also remember something called TRA. Am I correct? Tenant
Yeah,
rental
they have
assistance?
TRA. That's another one. That's temporarily. That's temporary.
Right.
That one, from what I know in New Jersey, the area where I'm at, everything must be included though. All utilities, and they just send you a check and you make sure all their bills is paid for the full year. So you can have that option if you want to do that, if you have a setup like that.
Awesome. Okay, any more questions for anybody before we end this panel? I guess no more. Okay, I put my company information over there with my office number. I guess, Fuquan, if you want to put your information there and your website,
Sure.
if anybody wants to reach out to you. We appreciate everybody coming on. If you have any questions, you could reach out to me tomorrow about our lending programs. Just to remind everybody, we specialize in fix and flips, buy and holds. We're nationwide. We're direct lenders, and we can share with you some insight and best practices on how to generate leads of properties, give you the economics, showing you the profits that you're going to be making on a deal, on a flip deal, the return on the investment. Is it better to buy it and do a BRRRR, which is buy it, rehab it, rent it, refinance, and repeat? So we'll go over all those strategies with you if you have a need. Is there anything else you want to convey to our guest tonight before we leave?
Now, everybody have a great time. Enjoy your summer.
Great. Thank you so much, everybody, and stay safe and enjoy.